Welcome to this webinar. It is a pleasure for me. Please, you will be receiving in a PDF everything that I will be teaching and saying into this webinar, so pay attention to the slides. Try to formulate the questions that you may have and send it also. At the end of the PDF page, there is also a link for my company and my email that you can also contact us directly should you would like to. In this case, this webinar is divided in 2 sessions because otherwise it will be too long. And Brandon, correct me if I am correct me if I'm wrong, but the session 2 will be next week also, correct?
January the 18th, and a week after next.
Okay. Oh, a week after next. Perfect. Okay, so in this session, this webinar is intended for anybody, employee, owners, or anyone who is just looking to pursue, a trend as a federal government business and contracting, and it will give you all the way from registration to bidding, and which we're going to spend a lot of time in this part of this session 1 today, about the bid and proposal process, which is very, very tedious right now. Okay, then the session 2, we are going to be talking about the once you are into the contract, how to manage it, how to deal with, and the issues that you need to take into account. Okay, so this class is not a how-to class. This class is intended to help you understand that government contracting is compliance, compliance, and compliance. So managing all this compliance and managing all these things give you a very intrinsic advantages once you are within each agency, and that is the most important part. Second, be prepared. Government contracting is one of the most audited business that you are. Don't be afraid if you are audited, okay, that's very common. I always tell people the question is not if you are going to be audited, but just simply when are you going to be audited. And the best situation in there is just be prepared for that audit. You want that auditor to go in there, check all the check marks, and then leave as soon as possible because you want to focus on productivity. So if you, can you move now to page 2, okay, which is showing the introduction to the class, the session 1 and the session 2. Session 1 is becoming a government contractor itself and including, okay, what is a bid and proposal process that we're going to have, in there. And, that's the 2 sessions that we're going to be covering, within each week. Okay, remember, becoming a government contractor, the first thing that you need to do, make sure that you are registered within the SAM, okay, the SAM registration, okay. If you are not registered in there, you cannot participate as a government contractor. Okay, what you need to be aware about RFI, RFP, RFQs, etc. Okay, understanding a lot of the concepts, whether to become a prime or whether to become a subcontractor first. Okay, and what are you intending to do, and what roles you may need to have between, okay, the people that you're going to be interacting once you become a government contractor, quotas, contracting officers, etc. Okay, based on that, take into account that if you wanted to do it as a business, you are going to be hiring employees, and therefore we're going to see in the session 2 how hiring the employees, what aspect do I need to take into account, and also that means that you're going to be having cash flow issues, so therefore understanding the financing. The part 5, we focus on the contract financing and issues, so you will be able to understand the value of government contracting as a business, which is very good in the long term, okay, but it's nothing for sure within the short term. So part 1, now, next slide, Brandon, becoming a government contractor. And after the next slide, okay, we go. So why and how the federal government purchase goods and services? You need to understand that the U.S. federal government is the largest procurement entity in the world. Taking that into account, the U.S. government has a lot of different agencies, offices, departments that they all need to acquire, from pencils, pen, paper, computers, to a lot of services to support everybody else in there. Yes, they have employees, but they also need a lot of services, in which that's where you, as a government contractor, can become. You need to decide, okay, whether the goods and services. Once you are into the process, before you even jump into registering to the SAM, you need to understand, what do you want to offer, or what does your company already offer? For that, everything is understood, okay, into what is called the NAICS code, N-A-I-C-S. Sometimes also portion of the SIC codes, but the most common ones utilized are the NICS codes. And you need to choose, okay, to which NAICS codes relate to your business. Once you understand and you manage that, the services that you provide may be in more than 1, 2, 3. There are companies that have 20 NICS codes listed in there. There is no magic. There is not something that you need to do. Just go to the census.gov/NICS code, and you will be able to see all the listing and definitions, okay, of the NICS codes that relates to your business. Take a note about the ones that you want to register, okay? Bless you. Thank you. Sorry about that. Okay, so and then you want to make sure that you are registered in all the ones that you need to provide, because the government, when they issue a procurement, they say, we need services within this NICS code, and your company in the SAM system needs to be registered with that. Don't be surprised. Everything that I'm saying, the registration in the SAM, everything related to researchers into the census.gov, it is completely free. Do not let anybody tell you that, oh, you will have to pay for this. If they are asking you this, you are in the wrong website. The government never asks you to pay for anything related to this, to the registration, to getting any information. Everything is absolutely free. I want to make sure that everybody understands that, because there are many times and processes that on some engines that when you type, oh, get me into the SAM system, it's going to take you into a different place, and they're going to tell you, oh, you need to pay me $1,000 to register you in here. That is a hoax. Say no immediately, and you should not be involved in any one of those items. Okay, you should not need to pay. It is tedious. You have to pay a lot of attention to detail, but you should be able to do it. Okay, and if we go now into the next page, okay, there are certain items that you will need to understand. Once you are and look at the amount of items and services, goods and services that the U.S. federal government purchased through all these agencies, you will see that the government is what is called a monopsony. All of you may not be familiar with that word, but you are familiar with a game and the word that is learned in the economy. Is called a monopoly. A monopoly is when you have one seller, when you have one seller and multiple buyers. That is called a monopsony. The opposite is what the government has, in which is the single buyer substantially control the market as the major purchasers of all goods and services that will be the sellers. So the opposite of a monopoly is a monopsony. Now remember, the U.S. federal government belongs to the people of the United States. Therefore, all taxpayers' money, remember, regardless of the agency, you are spending taxpayers' money. That is important to understand because unless you understand that, you will be able to then understand what is called the Federal Acquisitions Regulation. It's a set of principal rules regarding government procurement in the United States and is codified under the Chapter 1 of Title 48 of the Code of Federal Regulations, 48 CFR 1. And it covers all the issues from contracts from the U.S. military, NASA, and any civilian federal agencies. It's very broad, but if the contracts or the agency you are working is funded by taxpayers' money, then you are subject to the FAR. And the contracts that you get is going to tell you about all that. But you need to get extraordinarily familiar with what the Federal Acquisition Regulation is. It's a very, if you get it as a book, it's a very thick book. You have to take into account, assuming that everybody here is in a small business, so they are two FAR parts that you need to be very, very familiar with. FAR 31, which is about how you should control your finances when you are government contracting, and FAR Part 52. The FAR Part 52 is the largest one portion in the FAR, and some, we normally call those the pass-through clauses. They are usually incorporated by references, okay? And once you take a look at those, and once you look at it, even if you are the prime or you are the sub, the prime is obliged to pass through, that's what is called the pass-through clauses, into your contract as a sub, some of those clauses, into yours. Many people, and I wanted to advise this because many companies out there do not do a very good contract management, and they just give any subcontractor a 2 or 3 pages contract, and people say, well, they did not pass it to me, therefore don't apply it. No, you want them to be passed on to you. You wanted it to be there because if you are looking to become a government contractor for a long time, then you need to be very, very familiar with the FAR 52 clauses. What do they entail? Can you negotiate these clauses? You can negotiate if they apply or do not apply to you, but you cannot negotiate any change in the language of the FAR. I want to make sure because some people say, hey, can we change the language of this? And I usually have to tell them no. And you can spend money with attorneys and everything else, and attorneys today are very expensive. The good ones are costing an average above $1,000 an hour, and you do not want to overspend that money with anybody else. As in a small business, you may be having a chance to participate into what is called a set-aside solicitation. When you see the word set aside, the first thing that you need to do is to understand under which set aside. Is it set aside just for the small business? Is it set aside for women-owned business? If it's set aside for disadvantaged business, 8A, woman-owned disabled, veteran disabled business, or just veteran disabled, all of them. And if you want to know how those things and those rules apply, they are all in the FAR, and they are on the subpart 19.5 that you may want it also to get familiar. Now remember, the FAR was written by attorneys. So a lot of items that you may read on the FAR may look a little bit difficult to read and understand because it was written by attorneys for attorneys in that case. That does not mean that you cannot get specialized on this. If you need to get the entire FAR, if you need to download the entire FAR book in PDF, which is usually what I recommend, and is usually updated on a regular basis, just go to www.acquisition.gov, and you're going to find in there the full FAR book, all the FARs that you can search it, on the internet, etc. okay, by each one of the parts, or you can download the book. I prefer downloading the book. I have it in my computer as a PDF. When I'm reading any solicitation, any contract, and it's listing something, and let's say, for example, subpart 19.5 apply, like I mentioned, I just click in the search of the PDF document and say, search, let me, where is the 19.5? And then I can read everything in there to understand how it goes to. In addition to the Federal Acquisitions Regulation, any agency that is procuring goods and services have their own additional FAR supplement. Those FAR supplements, as you know, is for example, if you are procuring something from the Department of Defense, is going to be called the DFAR, for Defense Federal Acquisitions Regulations. You can, in acquisition.gov, they are also all listed in there, and you can download them also in there as they are applicable. Remember, they are multiple agencies and offices, and you need to have them. Now, what happens if the agency that you are dealing with is not what is called an appropriated agency, i.e., the taxpayers are not, regulated by the Congress? And I'm going to give you an example. The FAA, the things that regulates our airports aviation, they are paid with a special tax feature that is, okay, the fees that are paid when you are traveling in the road. There are some fees that you pay, like the toll. There are some other fees that are collected through the gas tax. Now that the electric vehicles are, starting to take a really high level of vehicles on the road, now during the regular tax registration for your license tax, now you have to pay an extra amount that is going to go over to fund the management and administrations of a lot of these items through the Department of Transportation. If it's related to the aviation, it's the FAA, etc. Those agencies, even though that some of their FAR may apply, and they will tell you which one, but also they have similar conditions that are identical to the Federal Acquisitions Regulations. So there is, reading and understanding the FAR will make you also understand the other FARs that they have in any one of those regulations. And you can get them all on the acquisition.gov website. Completely free again. I had a client one time. They said, I went over there to the website and they were trying to sell me the FAR for about $60. And I said, no, it's free. You don't need to pay any money for it. And he realized that he was not in the FAR. Remember, if you go to a website and it does not have the .gov, it's not a website of the federal government. I want to make sure everybody understands that. Okay? So it is very important to understand all this regulation, because that is what is going to generate all the compliances rules that you need to be aware of, and you need to make sure that you are following. 99% of the time, we even get here several clients that say, so they're telling me that I am in trouble because I didn't follow these issues based on this part, and I say, yeah, that's correct. But everything has a solution. You can finish it, you can join it, and sometimes some of the supplemental acquisitions regulations, like the DFAR, the ADAR, etc., are different for each agency and do not necessarily mean that they are necessarily one, mirror image the other. So you need to understand each one of them and why they are put in those. They are classes that you can take. One of the best ones that I have seen is called the FAR Boot Camp, and you can Google that out, and then they will let you know, you send somebody or you go yourself, and it takes like a week or 2 weeks. I don't remember how long now. The last one that I noticed and saw, it was about a week, and that was like 10 years ago. and about the FAR regulations, you know, and it's very good, okay, as a part of a good training in there, okay? So that is the most important issues to understand about the FAR regulation. Remember, because of the number of people in this webinar, I usually break down to have any questions, but okay, we will take all the questions, okay, probably at the end.
What was the name of the class again for the FAR? Can you repeat it?
It's called the FAR, F-A-R, Boot, B-O-O-T, Camp, C-A-M-P.
Thank you.
Okay, so if we can go now to the next slide. So we are now talking about that you review everything that you need to do. You decided that now you wanted to bid on the government contract. In order to be a government contractor, that's the first step. Okay, you register your company, you are doing everything correct, you have registered into your SAM, everything is fine, okay, it's being approved, and they go through all the hoops, including all the items that you need to do in there. And then, but you still have to bid, whether you are, you know, in any government contract issues, you have to bid into as part of that government contracts because you need to make a certain level of representations and issues, and you need to understand what's allowable, what's not allowable as a government contractor. So most of you probably have heard about it, the concept of prime versus subcontracting. That's something very important to know because you need to decide, do I want to be a prime contractor or do I want to be right now a subcontractor? Prime contractors have a lot of responsibilities. If this is your first time that you are doing as a government contractor, I will never recommend that you go as a prime, and I will always recommend that you start as a subcontractor. Now, there are multiple levels and tiers of subcontracting. We call it at levels of tiers because you might be a sub of a sub. That means that you are in the level 2, not in the level 1 of the subcontracting. Level 1 is that you are a subcontractor directly to the prime. Take into consideration that even when you are a sub, the government may want to approve your company as the subcontractor. For that, it's important that you are still registered in the SAM so they can see who you are and they can see all the items that you need to have. Under these several layers of activity, many people consider when you are in the subcontracting activity a commercial relationship between the prime or the multiple layers of subcontractors in there. Okay. But they say, no, I am not a government contractor because what I have is just a commercial regulations. You want the pass-through clauses. You want to be considered a subcontractor under these activities because being a subcontractor give you what is called past performance experience. And we're going to see later on the importance of these past performances in here. Okay, so you want to be treated as a government contractor, including that until about a year or 2 years ago, there was no, there was no requirement on the CPARs. CPARs stand for the Contractor Performance Agency rate, in which the contracting officer rate the performance of each person or each company within the contract. There was no need to list the subcontractors. Now they are required to list all the subcontractors. That's why it is very important that you be listed and approved as a subcontractors within this activity. Okay, and that gives you certain levels of maturity. So once you decide to become a prime and they say, do you have experience? Have you gained any experience as a subcontractor? Yes, here it is. We were doing this job as a subcontractor under this prime contract, and that's part of what you're going to be listing. And trust me, the contracting officers of any government agency have access to all the information on any agency through the CPAR systems. Okay? So also many people says, hey, but I may not want to be a subcontractor. I do not want to go through the hassle of forming a company. I just want to be a consultant. Can I be a consultant to the government? Yes, you can. It's called a personal services to the government. They are not that frequent. They are usually a year or less. Okay, in that sense, you can find it, and they are listed in which ones in the procurement agencies, which we're going to go over through it, how you identify them, is called as a personal service in there. Sometimes the contracts that they are asking are very small. They may say, may just need a person, and you will see that they're listed. This is not a personal service contract, which is mean that they are expecting a company to take care of these issues within this RFP. So that's part of what you need to take, then into account. Okay. Take also that as a government contractor or as a consultant or individual, you will be subject to certain level of responsibility and risk. And they're going to be listing all the stuff for you, in the solicitation. And you need to know and understand how you want to mitigate a lot of this risk. That is called, you need to have insurance coverages. And I want to make sure, because many people think insurance like a health insurance. Okay, no, we're talking about more like a liability insurance. Therefore, you need to understand the multiple levels of liabilities that your company may be subject to, because you will need to purchase insurance. That costs money, and you will need to add those costs to your contractual activities. If you are a company, it's easier to get certain level of liabilities insurance, for example, errors and omissions. And the cost is distributed among all the different contracts that you have. But if you are a solo person, i.e. you are having a personal contract just by one individual in there, or i.e. yourself, you still can get some of these general liabilities insurance, and you still can get even insurances such as errors and omissions, etc., but it's going to be more difficult. And being more difficult, it means that it's going to cost you more. Therefore, understanding your potential liabilities is very, very important, because that's what you're going to be using insurance to cover these items. If you are a corporation, whether it's an LLC or a C Corp or S Corp, whichever way you decided to incorporate, you need to understand that they are legal, financial, taxes, and operational issues. Because let's say you win a contract with 10 employees, the government is expecting that this, I say 10 employees, is that these 10 people are going to be employees of your company, not 1099 consultants. I have heard many people saying, oh, I have 1099 employees. That's an oxymoron. There is no such a thing as a 1099 employee. An employee is an employee of the company and follow the regulations from the IRS, very, very different than the 1099. The 1099 is called an independent consultant. You still can have independent consultants in your company. Nothing, prohibit you from doing that, but take into account that, especially we mentioned before, a set aside. If you are on the certain level of set aside, they are expecting that your company is going to be doing 51% or more, because that's the characteristic, with your own employees. And we're going to go through that as part of session 2. What does it mean becoming a withholding agents for withholding taxes, etc.? Okay, and what are the legal and financial obligations that you need to have? Okay. let's move now to the slide number 7, which is the next one. So you decided that you wanted to bid on certain government contracts. You still need to understand, okay, on the prime versus subcontracting. Most of the issues between prime and subcontracting are usually going to be related to your responsibility as a prime or your responsibilities as a subcontractor. Usually as a subcontractor, you're going to be taking a portion of employees, a portion of the prime contract, etc. Subcontracting activities is sometimes favorable. A lot of the large contracts that can be done by some of these large companies, they are required to provide subcontracting opportunities to a lot of small business, and that is usually regulated by a percentage. You're going to hear, within the veteran-owned business for this business, you must provide at least a 5, 6, 10% opportunities as a subcontractor in there. That is your opportunity, and for that, you will need to contact those primes that are in control of those companies, okay, of those contracts, sorry, and then you will need to make sure that they can vet you and then that you can become a subcontractor to them. That's why people refer to that government contracting is relationships, relationships, and relationships. So understanding the responsibilities and how to manage whether you are a prime or a sub, okay, it is extremely important. And remember, all these things and items that are required from the prime are going to be also required from you. For example, if it's a very large contract, maybe the prime is not in a small business, the only difference that you're going to see is that when you read into the contract that they are subject to CAS, which stands for Cost Accounting Standards, and that's part of FAR 32, what applies to you is FAR 31 as a small business, because in the representations and certifications that you will need to do as part of the Section K, you will need to say, no, I am in a small business, therefore CAS does not apply to me, but the FAR 31 is the one that applies. If you ask me then what is the difference between the FAR 31 and the FAR 32, the CAS, I can tell you they are actually the same. However, the reporting that you need to do is more detailed and complicated when you are using the FAR 32 or the CAS compliance. That's why you prefer to be into the FAR 31, because the reporting that you need to do to the government is way, way easier in that case, including that as part of within the FAR regulation, if your business, for example, is under $750,000 annual revenue in cash basis, okay, there are certain items that will not apply to your company. And that's part of what you need to know and understand. But remember, you want to grow the business. You want to make sure that you understand and that you can apply. So let's say that you decided to do, okay, that you decided to have a bunch of people as employees, another group as a 1099 because it's more convenient for you, etc. You need to know and understand all the 1099 rules and and how to apply it. I can tell you that, remember, the IRS can come over and audit you for your 1099 employees, and we're going to go through that also in session 2. And I can tell you one of the most brutal audits that I have ever been involved are the 1099 audits. All the other ones are extremely easy because part of the items is that the IRS have 10 questions. They're going to ask your firm, why do you choose a 1099 and not an employee? And there is only one clear answer in one of those 10 questions, is that does that consultant has his own insurance? And most of the time people fail to ask for that. And if you have not asking and you are not covered under that, okay, the IRS might come back and tell you these are not consultants, they are employees, and that's when the problems begin. Now, once you are into this process, you have, even as a subcontractor, you have responsibility too. You need to know and understand who is in control. Is the prime or is your company of the job and the items that you are going to be delivering to the government? You need to make sure that you understand that this is reflected in your subcontracting activities, and even at the bidding process, you need to make sure that this is also reflected in your teaming agreement. There is something called a teaming agreement that is usually signed when you are deciding to bid on a contract, and it's usually negotiated at that level. So understanding, evaluating the risk is probably the utmost importance to yourself and what you owe to your companies. Okay, the subcontracting negotiations, okay, have several legal areas, including the pass-through clauses that that the prime will be sending to you. So don't be surprised if even a one or two people subcontracting agreement is about 60 pages. That's because the prime receives also about 60 pages into the contract. And some of them are the small ones because they just say, okay, we are just incorporating this 52 clauses by references. So even though that they may just be listed in there, you need to go to your FAR and read them in detail to understand what they are asking for you to do. That's why it's called the pass-through, and it's applicable at any level of subcontracting that you may be involved with. Okay? So also remember that when you are a subcontractor, the government may want to know who are you, what are you doing, and you still may be subject to some reports to the government directly as a subcontractor, and they may approve you or do not approve you. So, but if you are having a problem between the prime, you as a sub with your prime, the government will not get involved on those relationships. They are trying to avoid it. Now, in most of the issues, I can tell you that in some cases the government are looking to protect your interest by making sure that, number one, if you are listed as a subcontractor, you're going to be part of that subcontracting activity. If it's not, the prime needs to say why not. And number two, that you are getting paid. That is also very important. And let me tell you, because in the past, I was the CFO of a small company at that time. We were a small business. We were a sub to a very large prime contractor. The prime has a problem with the government, and therefore the government stopped making payments to them, but we continued to work. And we were involved in a clause that says that the prime was telling us what is called the pay when pay, i.e., we were getting paid when the government was paying the prime contractor. Very common clause, not a problem. However, when they were fighting with the government agency, they were not getting paid, and we were being affected. And then our invoices, even though that we have a good line of credit and we were very well prepared, etc., started to hit 90 days plus, and everything started to get locked. I did make a call to the ombudsman, the small business ombudsman at the agency. They put me in contact with the procurement agency person, particularly for this contract. We discussed, and I started to make the calls at around 7:30, 8 o'clock in the morning. By 1 o'clock in the afternoon, the prime then called us, apologized, and sent us the money that it was owed to the company. So does the system work? Yes, it does work, but you need to be very, very, very careful when you click that trigger, because, of course, now the prime was getting a black eye in front of the government, and they do not like that. So be very careful when you exercise these options, okay? So, but if you are having a problem in negotiating a contract language or, issues between the prime and yourself, the government likelihood that it will get involved is almost nil or none. Okay, however, if you become familiar with all the FAR regulations, as I've been saying in there, you will be able to understand if what they're asking you makes sense or do not make any sense. Very, very, very important to know and to understand, especially when you need to be in control about some of the items that you are doing. And I know some of you will have a lot of questions about that because this is one of the most important issues that we need to understand. So please prepare and write down those questions, okay? Most of the items, just to let you know, subcontracting contracts are so standardized nowadays, and it's being shared from prime to prime and sub to sub, that most of the time people do not hire even an attorney to write a lot of these contracts. I have helped many contractors. I even have helped them write, subcontracts or read and understand subcontracts with their prime, etc., without the need of an attorney, because attorneys cost lots and lots of money today, and you want to make sure that you are not overspending the hard-earned money. Okay, but I can tell you because many times, okay, I have seen they send me a draft subcontract, and I just say, oh yeah, I have seen this one from this other prime, or from this other prime, or from this other company. So it's a very, very, very common to share that, okay, among the people. So don't be surprised if that is the case for you, and don't get bogged down that, oh my God, I need to hire an expensive attorney to deal with this. You may not need to, only if there is a problem. In negotiating one time on behalf of one of our clients, they were in a small business, but they have to hire a prime. They have to hire a large company to be their sub. We did brought in only an attorney to help us draft a clause on termination for default in that case, in which it was about how to define, okay, when the company was in default. And by the way, they did default it in the performance of the contract, so that did help, okay, in that sense. So, and that's part of what you wanted to make sure that you are managing and understanding. And in this case, my client was in a small business, but they were also the prime contractor. It was a business under the 8A set aside. So, moving now to the next slide, slide number 8. Okay, so we decided to bid. So now we need to understand, okay, what are the requests from the government? And that's what I say, it's an RFI versus an RFQ or versus an RFP. RFI stands for Request for Information, RFQ stands for a Request for Quotation, and RFP stands for a Request for Proposal. So when any agency is in need of something, they will, depending on how complicated, how easy to do, okay, they will either start issuing either an RFI, an RFQ, or an RFP. The main difference is that an RFI means that the government is searching for information on how to complete or fulfill the request, including the availability of potential sellers in there. They need information from the providers to evaluate the possibility of the procurement or even how to structure that specialized procurement. An RFQ is usually issued when the procurement, 90% is procurement of goods, few one for services, okay? But for example, if Brandon at the Veterans Affairs say, hey, I run out of pens and pencils, okay, they can actually just simply put an RFQ for bringing in a bunch of pens and pencils, or they can actually do it through what is called, and we're going to see later on, what is called a simplified acquisition process, okay, in which things do not have to be that complicated to do because it's actually a very small amount. And that's usually the request for a quote that you're going to have in there. An RFP, which is a request for proposal, is a more complicated procurement, might be a project-related, constructions, build-out, etc. Could also be a project that is just what we normally call operations and maintenance of something, or O&M, like an office building, take care of computer servers, system, machinery, O&M for the for all the operations in the building to make sure that they are doing, like the air conditioning, the plumbing, the hot water, everything in there, the electricity, etc., is running correct. Remember, the government procure usually for all this stuff. Some of them, they may decide to use their own employees, but some of them still, many times, they need support and services, and that's where your company is going to come over to provide this type of services. So the question is, okay, so RFQ are not as simple as a federal commercial activity that you may have seen, even if you are providing some services. Not to the federal government is good. You already have experience in that, and you can use that in your RFP or RFQ. Okay, but at the same time, okay, you may need to know that there will be additional level of compliances issues in any RFQ or RFP. So where do I get information about RFI, RFP, and RFQs? Well, every agency is mandated by the Congress, okay, to list every year what are their potential opportunities. Every agency will tell you, go to this page, go to this area, and you're going to see the list of all the potential opportunities that they will have for that year or for that quarter. If they do it by quarter, okay, make sure that you subscribe so when they update that information, you can receive it. A lot of these procurement activities, they will give you point of contact information, who are the quota, who are the people, what do they need. They are going to be by NICS code, NICS codes. Therefore, usually a lot of agencies put it out in a spreadsheet, and then you can filter by the NICS codes that are important to you. And then you can see the conditions, and usually that is the first information that you're going to be receiving. The RFP is not out, but they are telling you, we are expecting this in the last quarter of this fiscal year. Remember, when the government refers to fiscal year, they are talking about the government fiscal year, not yours or the calendar fiscal year, because the government fiscal year goes from October 1 to September the 30th. So the first quarter of the fiscal year goes from October 1 to December 31st, October, November, and December. So that's what you need to pay attention to it. The second quarter then goes from January through the end of March, and the last quarter is usually then from July the 1st to September the 30th. And that is very, very important to understand in the logistics, because that's how they're going to be issuing the RFP documentation. In addition to that, once you register into the SAM system, you're also going to have, full access to the bidsystem.com within the SAM, in which they are required to list all the RFP documentations listed in there, unless it is a separate task order under some of the IDIQs that they have. IDIQ stands for indefinite delivered, indefinite quantity. And a lot of agencies are now issuing IDIQ type of a contract because it's easier to procure those once they have selected a group of companies that are available. And the IDIQ may be just for that agency or might be a GWAC, General Wide Acquisitions, contract that can be used by multiple agencies. A sample of a GWAC, if you have listened to what, for example, is the 8A Stars 3 contract, that's a typical GWAC contract that can be used by multiple contracts. The GSA mass schedule, okay, multiple access, system, is also a GWAC type of a schedule, okay, that you have. So make sure that you get all the copies of this RFI, RFQ, RFP. Remember, getting this information, again, is completely free. There is no cost involved as long as you receive the information directly from the agency or the government. There are certain companies out there that specializes in compiling the information because sometimes it's come over from different places, and then they sell you that compilations and that packages of information. And they also give you some history. They also give you some what I call value-added information. But all of that, it is available normally for free. So you can either choose that, or you can choose to say, no, I don't want to chat, engage into anybody doing this. I just want to make sure that I do that I can do all my requirements and issues, including getting all the technical information in there. So you do not need to subscribe to any one of these people that are providing this value added in terms of the information that might be related to this RFI or RFQ. However, take into account the information about those opportunities are key to winning the contract. A lot of companies also specialize in intelligence information about it, that then it will let you know whether you should apply or not, or how the government is going to be seeing this. And it's sometimes, all this information sometimes do cost money because they are not freely available. You still can try to get in touch with government contracts people, just, in order to evaluate prior to the RFP or the RFQ being issued. Because once the RFP or the RFQ is issued, they have to be restrictive about to whom they provide the information in there. So it is important that you understand how you're going to do that. Now, in the simplified acquisition process, okay, that I mentioned before, yes, it's something that is so small that they don't need to go through a lot of this process of procurement, and there are several of them. Okay, so you can also search it, you can find it out, you can ask, okay, what about the simplified acquisition process? Okay, what it is available, how can I do with it? And, the agencies are mandated to let you know where you can get this information. Okay, some of them are so small that they just tell you, yeah, you're supposed just to do this work or to deliver these items, as a one time. They give you all the information. Those are very simple. So I have seen it as small as a one page, some of them. And I strongly recommend you that if you're planning to go through the small acquisition process, that you make sure that your company can accept credit card, because they love to pay all the small acquisition process through a credit card from the agency in that case. Okay. Let's move then to the next page, page 9. So once you look into the acquisition process, the RFP especially, or the RFQ, you're going to find out that they're going to be talking about that they are usually issued on the several types of contract. FFP, that stands for the full fixed price. T&M, that stands for the time and material. CPFF is usually understood as a cost plus fixed fee. There are other variables like CPAF is a cost plus award fee, and there are multiple variations on how the fee is then being calculated or earning, in several other contracts. The variations is usually depending on the industry classification and or the location of the contract. Industry classification, the NIAC codes, the NICE codes. Location of the contract, well, if you are going to be performing on a contract that is in the theater area, i.e. that is in the place that is under the war zone, you are taking risk, you're taking items. It's very difficult for the government to estimate the risk. And they cannot put you at the financial risk if they themselves cannot understand how to evaluate those risks. Therefore, they must give you what is called a cost-plus type of a contract, where the government is taking the full financial risk. When they give you a fixed-price contract, it means that all the variables are very well known. Therefore, the government feels that they can issue a fixed-price contract in which your company or yourself, you are going to be taking all the financial risk. The government is taking note. They say, I know this is thing, how much it's going to cost me, and that's what you have to deliver. in there. Okay, very, very common on O&M type of a projects, operations and management project, because things are very, very well known in that case. Okay, so the T&M is kind of like in the middle between the risk to the contractor or the risk to the government. Simply, there is an hourly rate that is determined by the way that the government asks you to be determined, and we're going to see that once you open the RFP. You need to take into account the direct cost rate plus the indirect cost rates, and the indirect is those items that the government feel that are going to have more than one classification under your accounting system. Either they have one, two, or more cost objectives. Common items on...
Mr. Gregory, can you hear me?
Yes, I can hear you.
Okay, I'm sorry for interrupting you. We have a issue that I just need to fix because something happened with Curtis' computer, and I believe I'm trying to pull it up so I can see everyone's comments. They cannot see the slide. So I just want to share my slide.
Let me know when you can put together the slide.
Okay. Okay, I just want to check with everyone. Are you able to see the slides now? I can. Okay, perfect. So, and I just want to make sure, Mr. Gregory, you're on the slide for type of contract?
I am in the slide for the type of contract, yes,
okay,
page
perfect.
9.
Okay, perfect. Thank you so much. I'll go ahead and unmute myself and allow you to continue.
That's okay. That's okay. Perfect. Perfect. So continuing, and I hope everybody can hear me, correct?
Yes, everyone can hear you.
Okay. So once you have those, different type of classifications, and the government has decided what type of a contract they are going to be issuing, okay, during the questions and answers, etc., you may want to refer to, hey, I think that the government should not issue this as a fixed price. It must be as a T&M, which is a share risk, okay, or as a cost plus, and you may need to say the why. I have seen contracts, okay, that they are issued within what we have several claims. Clean is something that you need to take into account. Clean stands for contract line item
Hi, Mr.
number.
Gregory, are you speaking? Because we can't hear you.
Yes, I am speaking. Can you hear me? Hello?
Okay,
Hello?
this is my audio. Okay, thank you, everyone. They can hear you. Everyone said they can hear you.
Okay, perfect. So the CLIN, C-L-I-N, stands for the contract line item number. You're going to see that your contract is going to come over, and the government is going to ask you to price things by CLIN. There is also something called a SLIN, or subcontract line item number. Some of you are familiar with project management. It's the exact same concept that you're going to see. In one case, for example, we were involved in a contract that every year it has 17 claims, in which all the possibilities, there were some claims that were full fixed price, there were some claims that were cost plus fixed fee in there. There was no claim that it was T&M in that case. But you need to make sure that you have the ability to manage those and that you can tell the government how much you are spending by the claim number. So we are going to see that as part of session 2 when we go over through the contract financing issues in there. Because when you are starting up into this, you are going to have what is called a value and a funding. And the government will never fund you the full amount at the very beginning. Okay, they may give you, you may be winning a contract for $5 million for 5 years, $1 million each year, but they may only tell you, okay, we are awarding you the base year that is only $1 million. Okay, you still have to earn and do a good job in order to get the second year, the third year, the fourth year, etc. And out of the first year, they may tell you we are only funding you for $250,000. That means that you have a value of $1 million, but a funding of $250,000. And we're going to see in session 2 that there are procedures and conditions in which you need to do a specialized reporting every month, okay? That's called the CEDRs, okay? And the items you need to report to the government contracting officer to understand how you are burning the money and how much money is left into the place. So that's part of the value and the funding that you need to understand. Billing instruction, how am I going to get paid? That's all of those are usually listed in the section L of the RFP, and it will tell you, yes, okay, yeah, you have $1 million contract for the first year, but you need to bill us on a monthly basis. Sometimes the easiest one, if it's a fixed price contract, you take the $1 million, you divide it by 12, and you send that invoice every month. You still have to do deliverables. No deliverables means no payment. So nothing is free in here. Okay, on a T&M contract, you need to send reports on how many hours people have worked, and on the cost type of the contract, the reportings are more complicated because you need to tell the government how much you paid in salary, you know, and then they add all the different indirect rates in there, and the corresponding fee associated, you know, as part of the cost type, CPFF. Okay, now remember, you may be delivering goods or services. If it's goods, it's about the goods that you are delivering. Particularly, you need to know and understand when the government considers that they have received the goods. Okay, there are certain documentations that you need to make sure. The fact that they may have left your warehouse doesn't mean that the government has received it. So if you are familiar with delivering goods and services, you need to make sure that your contract calls if it's FOB or CIF. If you remember, FOB means free on board of the shipping that you are sending, whether it's a ship, okay, in the sea, or whether it's a container that you are sending via train or truck, okay, and CIF means cost, you know, on the fleet, which is mean that it's going to be paid when they receive it at the government warehouse and the goods are exchanging hands and the ownership of the goods now is in control to the government. All of that is usually listed in the RFP or RFQ that they are asking you to complete. And you need to have all these documentations, who is the receiving entity, who is everything, because you need to attach those to your invoices in order to submit it to the government for payment. The good news is that when you do everything by the book, that everything is correctly, the government used to take between 35 to sometimes 50 days to pay. Now it's taking less than 30 days. We are seeing payments coming in, especially with the Department of Defense, the so-called white area workflow, that we submit an invoice, you know, 15 days later, we're getting paid. So that's the good news, but you need to make sure that you are doing everything by the book. When I hear people, oh, they are not paying me, they are, you know, this, I said, no, I always tell them, you are doing something wrong. Let's analyze what you are doing wrong. And when we analyze, we find out there are missing reports, incomplete reports, or some items that the government is asking that they are not providing, and the people in their offices are not paying the necessary attention. One of the greatest things about doing this type of a job for the government is that the government pays sooner or later. I mean, you know, and when you have an invoice from the government, it's like an institution that is a AAA bond that is telling you, yes, I'm going to pay you. It's one of the most comforting issues. Okay, the most important issue is just to make sure, number one, that you have delivered your goods and that you're going to get paid. And there are several issues in there that if for whatever issue, remember, even in the government, you're dealing with people, and people sometimes may agree or may not agree with you. You may find out that there are items in there. So that's the most portion, okay, to understand. At this moment, if you want to, we've been now for an hour. Do we want to take a quick break? The next portion is what is a bid and proposal. It's going to take also about an hour, and it's about 12 noon. The people may decide that if we wanted to take a break, Okay.
Yes,
Then
I
we
see the questions
can do it
coming
for
in.
about 5 to 10 minutes.
Okay, so I'll make sure everyone, we have for Eastern Time Zone 12:08. We'll come back in about 5 to 10 minutes. A 10-minute break. Okay, I see the chat. We can come back
Okay.
at 12:18.
Perfect.
All right. Thank you, everyone. And while you're stepping away, I'll be catching up, trying to answer some of the questions that we kind of missed. Okay.
Okay.
All right. Thank you.
Okay. Okay. I am not going to hang up. I'm just going to leave the phone down. Okay. I do need to do one of those things that I cannot delegate, and then I'll be back. Okay.
All right. Perfect.
We'll come back to. So we are now to be in page 11. What is a bid and proposal? Understanding the BMP process. So we were talking about how the government procure the different items, RFP, RFI, etc. Within the government contracting, we call that a BMP, bid and proposals, and there are multiple levels. And the important issue is to understand, okay, are you in the business of goods? Are you in the business of services? Okay, and how do you are planning to respond to some of this? Not two BMPs are the same, depending also on the business that you are, and even sometimes for the same items and the same issues, there will be difference, okay, because the government might be requested, might be changing and doing things that you need to understand. Remember, take into account the business cycles that you are into within the fiscal years of the government. We always say that the busiest time of the year is between July 1 and September the 30th. This is the time that the government is ending the fiscal year, and they must issue all the RFP because they want all this money to be allocated within their budget. So therefore, we also have a word among all government contractors, say, yeah, the floodgates are open. And when that floodgates are open means that you're going to get what we call a lot of water, i.e. tons of RFPs in the market that they are expecting you to respond. That is good, but that also can be very difficult and very bad, especially to respond, and to respond with the quality and the timing that they are also expecting in there. Okay, so take into account that if the government knows and understands that certain RFPs are complicated and difficult to deal with, they're probably going to issue what is called a pre-RFP, different than the RFI. A pre-RFP is just to let you know this is a procurement that is coming. You need to be prepared. Once you see the pre-RFP, start working on it. Make sure, okay, and all of those issues are going to take resources, timing, etc., from your company, because some of them are so big and so complicated that they may issue it within the range of 30 days. If you have not been working on this for the last several months, trust me, you won't be able to put together a good response, okay, within the 30 days that you need to. And if you can, it's going to cost you a fortune because you will need to hire several consultants, people, some of your employees to dedicate the time for that. So that's what we call it a BMP. So make sure that the cycles in which the government is in, you can understand it, that you can manage it, and that you can do all the important items that the government is asking you to respond within this RFP. That's why it is very important to make sure that you are prepared. How much in advance? A lot. Okay, remember, resources are limited and sometimes even difficult to get. Okay, so you need to get as much information, and some of this information that you may need to get about this RFP and what they are asking has to be, based on certain level of intelligence, almost like only the people who knows in there that are. But to give you an idea, sometimes in order to get those intelligence items, you have to contact the people that have been working already in that particular contract for the previous previous year, so they can tell you where the problems are, what the good issues are, and how the current incumbent is situated. So to know, can I take out this incumbent right now, then they will tell you the likelihood is yes, but if the government is very happy with them, they're going to tell you the likelihood is no. Why a lot of these issues are important? Because you need to be making constant decisions at that moment. And those constant decisions, okay, is to make sure that you are not wasting your resources and wasting your money into it. Also, we normally recommend, okay, keep an eye on the agencies. Select 1, 2, or 3 agencies. Don't go after a wide variety of agencies, because that can take a lot of resources and money, and you might be diluted yourself. So select 1 or 2 agencies, look over to make sure that you fit within what this agency is asking for, and then start the process of getting the information. Remember, visiting the agency procurement page, it will tell you what is becoming available and when may become available, okay? And then you need to sometimes even visit those pages on a daily basis. So yes, it takes time and it takes features. And remember, you need to make sure that you are within the NICE codes that they have, because in the other side of the government, once you submit it, they're going to match and they're going to say, hey, this company is not within this NICE code. So you do not want to be rejected in there. So you want to make sure that you are involved into some of those NICE codes. And it's pretty easy to add the NICE code. You may start with 2 or 3 or 4 NICE codes, but later on you find out another one that fits you. Go to the SAM system and add the NICE codes. It doesn't take that long. It only takes a few minutes to do it, okay? Make sure that you are still within what is called the pre-RFP if you want to get some information out, and the government may want to respond to you. Because once the RFP is officially out, as an official RFP that you say, okay, this is due this date, etc., the government may restrict the level of information that they ask you if you call. There's going to be also a period that they ask, if anybody has any questions related to this RFP, please send it by this date in writing, sometimes using specialized forms in there. And you need to make sure that you are complying with a lot of these issues, okay? Because remember, whatever you ask, they have to be on the same basis of anybody else that asks, okay, at that level. Okay, so reading and understanding the RFP or the pre-RFP, trust me, is almost a science that you need to know and understand. And that you must show to the government that you are the best candidate to execute this job at the best price with the lowest risk to the government in there. So those are the 3 keys that you need to understand. And remember, you are not going to be the only one, unless you are into a category set aside for a sole source. And there are many multiple ways to get a sole source, but they are also far more difficult to know and understand. And the government, most of the time, is trying to make sure that you can do the job. If they are not convinced that you can do the job, they are not going to give you a sole source. That's the most important issue, okay, that you need to know. Understand that that you have the ability to do the job at the best price and the lowest risk to the government. And remember, you're going to be competing against multiple other companies that you have in there, okay? So if we move to the next slide, number 12, we're going to be looking, okay, understanding the BMP process. We talk about it, the set-aside categories and what do they assist, okay? So make sure that if they say, oh, this is for a veteran business, disabled business, SDV, OSB, for example, that you have that certification from the Department of Veterans Affairs. If you do not have that certification, then you might not be able to participate as a prime in there. But even the fact that you have that certification doesn't mean that you're going to be chosen automatically. It's just that you are eligible to participate in there. If they say that this is just a small business, or this is a Veterans Affairs, or hot zone, that is another classification, or the small disadvantaged business, or women-owned business, make sure that you follow that classifications and that your SAM system registrations reflect that certification also. Failure to do that means that you are not going to be awarded even if you show that you are the best company to do these things, okay? And again, read the FAR. Make sure that you are completely aware, and if you see that they are making some changes or that some of the items in there shall not apply because of the set-aside, say so in the questions asked. I have seen that many times, that in the procurement process, in the RFP, they listed clauses that contradict each other. And I have seen it from restricting the entire RFP and then issuing it later to say, oh yeah, this is just a small mistake, let's just correct it, you know, and follow this process in here. So when does the BMP process start for your company? Well, at the moment that you look at the potential opportunity and you get as much information, and that is from looking at, oh, this is going to be issued in this day, that's when your BMP process actually starts. And I recommend it normally that you start tracking it as that category, because a BMP process is a project for your company. And the more organized that you are about your company, the better off you are. So you need to make sure that you have a team that you can put together the responses, the responsibilities of each person, and how well that team manages internal issues is what is going to tell you, okay, what is the best success that you have. And remember, everything that you do into an RFP costs money, and it costs money that you may not get reimbursed unless you are the winner of the contract. Okay? And consider that when somebody from, let's say, they put together an RFP and there are 30 companies competing for that RFP, only one of you are going to get that contract. The other 30 will not. How can you differentiate yourself from these other 30? Crucial is getting information and organize, okay, for each proposal. Information is critical, because if you don't have the necessary information to convince the government, then you may be wasting your time. We call the strategy when you are not getting information, or you are just throwing it in the wall to see if it sticks. That is a strategy. It is a very, very, very costly strategy. Trust me. Okay, I have seen it many times, okay, and it costs a lot and lots of money. There are other companies that specializes in getting you the information, but evaluate them before you join the process to understand if the information they're going to be giving you is crucial and it is feasible and it is critical for your RFP. Because if what they are giving you is something that you can get anywhere, etc., then everybody's going to be getting the same information. Therefore, it's not that critical. Why spend money in some of those items? That's part of what you may want to make sure that you understand about information. That's why I put it in there in big bold letters. Getting information is crucial in order to produce a good proposal. If we move now to the next slide, number 13 is analyzing the proposal. First of all, you see the proposal is coming. Everybody's telling you, yeah, we should bid, we should do, but analyze it, okay? You need to do what we call a bid or not to bid situation. Okay, so because you are going to be spending a lot of money and you're going to be using a lot of resources from your company, from your business, okay, but is the bid and proposal necessary? Yeah, without it, you cannot win any contract. If you don't win any contract, you won't be able to be in business. But you need to make sure that you have the ability to successfully respond to this process. you want to make sure that you do not lose the house while trying to respond to this process. So that's what I say. It is a project. It is a very key project. It is a necessary project that you need to do, and that you need to make sure that you control a lot of the costs in a successful way. Okay, now, don't fool yourself. Many people, I say, oh, yeah, I see this RFP. This is what's written for us. For sure we're going to win. No, 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 no. Your chances to winning a proposal is never 100%. Never. Even when you are in the sole source, that it should be 100%, the probability is still just a 50-50. And those are the best chances that you're going to get, because even when you submit a proposal on the sole source, the government says, no, you did not convince us. We are not awarding this to you. So it's never. Now, the probability to win a proposal is what we know in the industry as the P-win ratio, or P-win probability. I see many people say, oh, yeah, our P-win ratio is about, 80%. No, I don't think so. Again, even in the best circumstances, at the best cases, it's a 50%. Imagine now that if you are bidding in a proposal and you have 30 other companies bidding in there, 1 divided by 30 does not equal 80%. And you have no way to know how good or bad the others are. You can infer it by looking at how many contracts they have, and if they've been a very veteran into the business and they have a lot of experience, okay, that means that they have won a lot. But do not fool yourself, like I've seen many people saying, yeah, our chances to win this proposal is 100%. It's for us to lose, what they always say. But among all these efforts, you need to understand, once you are seeing the proposal, for example, what we said before, should I be prime? Should I be sub? First of all, if you want it to be a prime, look, do you have the necessary resources to operate as a prime contractor? It's a lot of issues that you need to take into account, because you're going to be 100% responsible, not just for your job, but also for the subcontractor job, and you need to show that to the government. Because if the subcontractor fails, the government is going to be looking at you as the prime, as the responsible party to deliver what is needed to make sure that the contract is executed on time and within budget. Okay? So you need to make sure that your resources are not drained in an outstanding manner, even at the proposal level. Now, the advantage sometimes of being a subcontractor is that you do not have to commit the same level of resources, and you have the ability to then just simply be a subcontractor. It's a lower cost, but you are still participating, only into a portion amount, etc., but you have that. But you have the ability then to submit into this. Now, 10 years ago, I can tell you, because I've been now 30 years into this business, but 10 years ago, most companies, when they do a great job, they have to bid on 3 contracts, 3 RFPs in order to win one. Today, this number has increased tremendously. Those days that you bid on 3 and you know for sure you're going to get one, i.e. that your P-win probability was considered a 30 to a 33%, 1 divided by, by 3, that's where you get the 33%. It's now that you have to bid in 10 to 12 RFP, do a great job, and maybe you're going to win one. Therefore, make sure that you understand what you're doing, and especially when you are starting, if you are a brand new business, you have to expect, don't waste your time trying to be a prime for the first 2 or 3 years. Just be a sub. It's easier, it's faster, and you don't have to waste that many resources. That is my professional recommendation. Okay, and depending on your ability to win with some of those primes, you're going to learn a lot on how to succeed into this business. So even in this bid or no bid, ask yourself: do we want to be a prime or do we want it to be a subcontractor? And even in both of them, you need to make a decision, shall we bid? Because also what happens if you get 10 opportunities at the same time? Can you respond to the 10 opportunities, whether it's a prime or a sub? Probably not, because it's going to require a lot of money and a lot of resources in there. So then you need to make sure which one are you going to be responding. I have seen many people that say, oh, we want to respond to all. That's almost impossible in this case. So choose and look at your opportunities and the resources that you have available to determine that. You can do a budget, internally to make sure that you understand, okay, how the resources are going to become thinner and more difficult to do or not in that case. Let's move to slide 14. It's a continuation. Should we prime or should we be a subcontractor? Okay, as I say, most of the time in the sales, all the good sales guys, they sell themselves and they are bid. And I always say, no, hold on, wait a second. We have many open questions that need answered to make the decision. It's either a yes or a no. And you, as the main owner of the company or the main decision maker on these items, you need to be realistic as possible. Okay, because the last thing that you want is to respond to the RFP, win the RFP, but your company is out of business because you wasted or used all the resources. Or you may have chosen an RFP that may look very fantastic to have, but once you take a look at the other ones that are, that were issued maybe 1 or 2 days later by this other agency, those will have been easier to get. But now you are committed into this one. So you need to take in the best case scenario, okay, and understand both human and financial resources, how much it will take to do all these RFPs, how much it will take, and track it, manage it. Even the government asks you, are you tracking how much this cost is going to have? Because especially BMP costs having a special treatment within the FAR 31 and the accounting standard system and the treatment that you have, in your indirect rates. Okay, so take a lot of those issues into account to understand how your financial management structure, accounting, HR, purchase, etc., can successfully manage this contract and this RFP. And do you have the necessary financial support that you may go through several payrolls? Even, let's say you win. You hire the people. You have to pay the people before sometimes you can get your first invoice paid, or even before you are invoiced. Do you have that money available? Those are the issues that you need to take into account, okay, about, should we prime, should we subcontract, okay, and the conditions. Some of the good news is that when you are in a small business, you may be subject to what is called the Prompt Payment Act. The Prompt Payment Act allows you to request to bill every 15 days rather than to bill every 30 days. So the money can come over to your company faster in that case, because line of credits, okay, are difficult and very costly sometimes to get. And we're going to go through that in the session too. Okay, and even as a subcontractor, you still may have a financial burden and challenges that you wanted to make sure that you can manage in that case. Okay, so make sure that you are prepared when you want to bid in this case. Next slide, which is 15, proposal planning and capture management. We are introducing this new word, capture management, because it's part of the proposal planning. Capture, or opportunity management, is a disciplined approach to qualifying the business opportunities and developing a win strategy to improve your probability of winning in a specific strategic opportunity. Captures mean that you are getting the right information that is critical to win. Sometimes you have to pay to get those capture management. There are a lot of processes that you may want to have, and that companies then usually follow or take into account in order to do a good proposal. Okay, for example, usually in a good proposal, you need to make sure that you have a great proposal package that you can distribute to your team, what we call the proposal kickoff package, to everybody to understand what is needed at what time and when, a compliance matrix that is kind of a cross-mat of the proposal instructions, typically within Section L and Section M, the evaluations, the statement of work that is part of your Section C. And then you have your production checklist. Okay, don't give the evaluators the reason to disqualify you because you forgot to include something in your production file. A small investment would save all the hard work from being wasted in this case. And then make sure that you have a good proposal schedule. I can tell you, okay, BMP is extremely stressful within any company, and normally get the best and the worst out of everybody. So make sure that everybody within your team understand that. Make sure that you are tracking everything. People call it, okay, do you have a capability matrix or gap analysis to understand where? It very well be that you say, hey, I can do 90% of this, but there's still a 10% that you may want to prime, but you may need to team up with other companies that specialize in that 10% or 20% or 30% that you may be missing in there. And then you need to decide, do you want it to go as in the relationship as a prime and a sub, or do you want it to go into what is called a teaming arrangement in which both of companies are bidding as a prime in that case? But the government wants to deal just with one of you. So you need to name who is the leader in that teaming arrangement. Very common on GSA contracts, just to let you know. So if you take a look, if you do all the planning correctly, and that's part of your capture management and capture plan, you're going to have a good identification of the opportunity, make sure that you understand your competitor. If the government is extremely happy with the current incumbent and the current incumbent is planning to participate, maybe what you need to do is just to say, hey, can we be a sub to the incumbent, to the current incumbent? That's possible. Remember what I say this morning, relationship, relationship, and relationship. Develop those relationships that you are allowed to be in. If you are into, if this is a section that is a small business, maybe the current incumbent is in a small business or was in a small business when they win, but by the time that is issued again, they are no longer in a small business, so they need someone to be the small business to frontage this opportunity, and they love to get in there because they're going to go from being the prime to being the sub. The government will look at them and say, yeah, the people that we like are in there, and we know that they're going to make sure that everything is developed, then on time. And then you go from being the sub to being the prime in that case. So, and understand that even from a pre-RFP to the RFP, and even from the beginning of the RFP until the end, a lot of things may be changing. Sometimes a few months or years sometimes may go, depending on that. So you need to keep making, because whatever assumptions you may have made about that RFP several weeks or months ago may not be true today. And you do not want to make sure that you may have made a decision, yes, we are, based on the information we have today, this is a go, but 2 months goes by, the situation changes, and you may not be able to bid as a prime, you may need to go as a sub, or you may want to abandon the effort all over. Those are the things that you need to understand when you are into this proposal planning and capture management process, to understand how to manage and understand what is the best for your company. I know that all of you are going to have a lot of questions in there when we come over. We are almost getting to the end. So in the 16, I call it the anatomy of an RFP. In essence, the basic structure for most of the proposals you're going to see in the instructional system, you're going to have from 2 minimum to normally 3 volumes. Volume 1 is your technical proposal, how you're going to be responding. Volume 2 is your past performance, and Volume 3 is your cost proposal. Each volume is developed completely independent from the others. You should not mix them or make a reference. For example, you're going to find out that they tell you in the technical proposal they don't want to see anything related to the cost. That should be only into the cost proposal. But the cost proposal needs to be syncing with what you are proposing technically in that case. But you need to make sure that you are complying with the instructions that you are doing, that you're having, okay, into the proposal process. That's why sometimes you put people in charge of each one of the different volumes, okay, and those are the issues that you need. Looking at your proposal instructions, as I mentioned, section L and M, they always tell you what to include in there, okay, if simplify or not. So always make sure that you read all the instruction to the offeror. Usually in the structure of the proposal, that's part of your section 4 of the proposal on your SF33. In addition, you also may have a section K, which is the additional representation and certifications, statements of offerors. Normally, when you register into the SAM system, you file a section K in there. Sometimes they tell you, if you file it in the SAM system, just tell us that this is still valid. Even if you have filed it, you still may need to produce a new section K. And pay attention if they wanted it as a separate volume or they wanted it included into the cost proposal or the past performances or the technical. Pay attention also to the areas that you know that they may be asking you, okay, who are the people that you wanted to have in there? If they say, oh, you have certain key personnel, they're asking you to provide resumes of the key personnel, and sometimes even if they are not your employees already, you may need to produce letters signed from that person that you already interview and agree that says, yes, I am agreeing to work for the government, okay, as the key person on this, okay, should this, contract is awarded. So you may want to list some of those letters. And the resume, sometimes they have restrictions. The resume should be 1 page, no more than 2 pages. And where to include them are going to be part of the page counts. They're not going to count as part of the page counts. Okay, make sure that they are formatted correctly because there are always limitations on the number of pages, graphic charts, size of the fonts, et cetera, and how much they should be. Follow those restrictions. It's very important that you comply with them. I have seen many people say, well, what I'm going to do is that I'm going to change the size of the font. No, they have the ability to detect that, especially now when 98% of the proposals are submitted electronically. They can just simply look, okay, what font size are you using in there? Okay, so you want to make sure that you are complying with all these items, and this is all part of the proposal process, and your team needs to know that. I've seen many times that, hey, we have a great solution, but the proposal, the technical volume cannot be more than 10 pages, but we are at 12. Okay, well, you need to cut 2 pages out of that. That means that you need to write a better proposal at that moment and use the technique on how you can, decrease it, okay, following the conditions of the font, the size, the margins, the 1 inch, okay, on every side, et cetera, to make sure that you are complying with a lot of these requests. That's why a lot of times you're going to find out that people say, do you know how to write proposal? Do you have the experience to make sure that you can write the proposal? This is one of the aspects and items that most of the time we are asking to individuals bring in as part of the team. And it's an art in a lot of these issues, an art and a science to understand. If we move now to page 17, is the bid preparations and submissions, okay? Remember everything that we were talking before, that the bid preparation and submission is a project itself. Okay, if you have to produce everything in paper and submit it, make sure that you are accounting for the time that the people will need to drive to the agency to be there on time and then provide the documents. Thank God that since the COVID now, everything used to be maybe 50% submission electronically, 50% in paper. Now it is almost 100% in paper. However, there are still some agencies that, because of the work that this agency do, especially as a lot of these intelligence agencies, you still have to submit the proposal in paper. They are not allowed you to submit it electronically. Timelines, very, very important. The timelines are issued into all RFP documents. Make sure that you have that. In fact, in some cases, there are certain volumes and areas and items in there that are asking you to submit that must be submitted even 1 week prior to the deadline of the entire submission. And you need to make sure that you are doing that. When are the questions permitted? When is the due time to receive, to the questions, okay? And will the government have the time to, to respond to the question? They must respond. Usually, if they have not responded, then you can request, hey, you will need to extend this proposal because you haven't responded to these questions. And even they cannot tell you, here are the questions, the proposal is still due this afternoon. It just depends on the kind of questions that they were and the kind of an issues. Okay, because all proposals are subject to what is called protestation. If something is not right in the proposal, you can protest it. Okay, usually to the agencies, to the contract, most of the time to the GAO, General Accountability Office. Okay, but protestations are costly. Sometimes denote the negative issues. I personally have not seen any positive issues coming out of a protestation. Just to let you know, I normally do not recommend it unless there is something very, very crassly wrong in there. So, but check how you need to submit this, if it's electronic or if it is by paper, and make sure that you can. For example, if it's by paper, that means that your proposal needs to be ready maybe 1 or 2 days before the due date, because you need to send it, to be printed, to be binded, and then take all these binders, put it into a box or together in some way, somehow, and then deliver them to the agency on time. And sometimes count on traffic. Do you know how much traffic there will be when you are going over there? Because if they say it must be submitted at this address and this location no later than 3 o'clock in the afternoon, if you arrive at 3:01, 3:02, they're going to tell you, sorry, it's locked, bye, and you are not allowed to submit it. I have seen that happen many, 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 many times. Okay? When you are a subcontractor also, you need to make sure that you are part of the winning team and you are part of this prime team that you need to make sure that there are even certain items that may need to be included in the original proposal. Some of them, especially on the pricing, you may need to submit it into what is called a sealed envelope or the sealed information directly to the government, because you may not want to reveal to your prime what are your indirect rates or your total disclosure of cost, okay? But you have to disclose that to the federal government. So therefore, make sure that you are submitting that on time. I have seen that case in which a company, everybody submitted, everything was fine. The subcontractor forgot to submit the sealed, information, and therefore they were disqualified. Not the subcontractor, but the prime and the sub were disqualified. So you need to make sure that whomever is the sub, whether it's you are the sub or whether you are the prime and you are choosing the sub, that they have the ability to deliver what needs to be delivered on time. And somebody within your firm, whether it's yourself or somebody that you may have delegated this after, has to be on top of them to make sure that these items are delivered. Another thing is that whether you win or you lose, always request a debriefing, because that will tell you, based on the evaluators, what you did right and what you did wrong. And you want to have that in order to improve, okay, in how you are submitting to the next one, to the next one, and to the next one. Okay? In addition to this, also make sure that there is enough legality that if you are a sub, that you will have what is called a good teaming agreement, and that the teaming agreement states that, hey, we won, they have to give you a contract, the subcontract agreement. I have seen many teaming agreements that say, oh, if we win, then we will decide if we are going to give you a subcontract agreement. It says, no, don't accept that, because otherwise, what are you working for? For an if situation? No. You have to give me a contract at that moment. Okay, especially no one is that, many companies out there are trying to trick you because they know that they need somebody like you. I remember one time when I was the CFO of a small business that they say, yeah, we need some small business. Okay, you guys are 8A, you guys are small, blah, blah, blah. We need to submit this bid. And they put it in there. They won the bid. But what they say, the contract was a 5-year contract, and they say, yeah, we are giving you the portion that is needed in the last 6 months of the contract. It was a 5-year contract. So I say, oh, this is great. So we won, but we won't get any job in 4.5 years now. And I told the sales guy, great job, by the way, of course, in a sarcastic manner. But that's part of, the issues that you guys need to understand. He was tricked in using us in order to win, but they push us. I mean, who's going to remember that we are in there in 4.5 years from that time? Honestly, I left that firm after a year because I was headhunted by another firm, so I'm not even sure if they were able to execute that or not, just to give you an idea. So that's part of what you need to know and understand as part of the B&P process in here. That will bring us to the end of the this session. So we shall be ready. In the PDF information you're going to be receiving is all my information about my firm, myself, and my telephone number and my email. I prefer if you guys send us email for whatever request of information that you may have about us. Brandon, we should be ready now for any questions.
Awesome. Thank you, Mr. Greg. Well, we will answer a few questions. It is 1 o'clock, so I don't want to hold anybody too much longer. Thank you for attending. But we'll get a few in before you leave, Mr. Gregory.
Sure.
Scrolling back up, and one second, because it was a lot of questions. We do have a lot of questions.
Curtis, if you started to talk, there were a few questions I deferred for him. So it'll be slightly easier since they're bold for you to be able to see it where it says defer when you're scrolling down. A good majority of them I was able to respond to them.
Okay.
Okay.
Defer to. Somebody asked, would these contract terms you were referring to earlier, example, I think it says CLIN, I think that's what that says, be detailed in the FAR?
Okay, can you repeat that slowly? I know it's about the contract and something about the FAR.
Sure. It said, would these contract terms, example, CLIN, etc., be detailed in the FAR?
No. They only will tell you what type of a contract may need to be issued per FAR regulations, okay, but the timeliness and issues now is subject all to the contracting and the court. You're going to see in the next sessions, okay, that every contract has two. The contracting officers and the contracting officer technical representative are also known as the core. Once you become a contractor of everything, the core that knows all the technical issues is the one that you're going to be dealing on a daily basis. The contracting officers is the only one that can bind your corporation, okay, and that know all the prerogative and legality issues in there. But the FAR cannot tell you, oh, this must be a contract that is for a year. You will never see that within the FAR. Now, what the FAR may dictate, oh, this type of a contract must be either a cost plus, because there is no way if the government can identify all the risk associated with this contract. But remember, it's written by attorneys, so you are never going to find a very clear language defined in that way, in that sense. Not sure if that helps in that answer.
Got you. Thank you. I see a question here that says, since when have all subs needed to be approved? I've often seen single person companies subcontracting through the prime or another sub 5+ years ago. Is that not very feasible now, given the new requirements?
It is feasible. It's called, second tier sub, but it will be then to your first tier to make sure that you are listed there then as a second tier. The government may want to ask, we want to know more about the second tier sub, or they may say, no, it's okay as long as the first tier subcontractor takes 100% responsibility for that job.
Awesome. Thank you. Another question came in. Since we all have subs needed to, I just answered that, sorry. And with respect to inflation, what is the rate range between being incorporated into current contracts for professional labor rates?
That is one of what I call now the several million-dollar question. Because at the very beginning, you have to make an inference about how much is going to be the inflation even 5 years from now. For the last 10, 15 years, the economy has been very stable until all the way about 2 years ago, in which the inflation hits a very, very high number. Most of the time, you are not allowed to make changes. However, some agencies, including the Department of Defense, came over with some ways that they will allow you to do some kind of equitable arrangement to increase the price at a different level, or they may need to be rebid all again at that time. Most of the time, the government will follow what the Bureau of Labor and Statistics will say about those specific categories. A request for increase in inflation rate, or the increase in labor rates, on how it's affecting the company, depending if you are doing an operation issues that may affect some of the costs. Let's say that you may need to have maintenance truck, transportations and issues, then you may want to look at the fuel prices, and that's why in some cases, you may want to say, hey, things are so unstable in here that rather than to have a fixed price contract, we may need to have a cost-plus contract for some of these cleans. Not necessarily the entire contract, but some of the cleans, because the prices can change. Okay, but sometimes they say, well, if you're going to have to travel, you're going to follow what is called the Joint Travel Agreement, the JTR of the Federal Travel Agreement issues, in which they tell you you're going to be reimbursed by what the IRS consider the reimbursable rates per mileage and using a regular vehicle in that sense. And if the IRS change that in the middle of your contract, you are allowed to increase that mileage rate, because they are not talking about use this specific mileage rate. They are saying use the IRS or the mileage regulation that is included in the JTR in that case. So that's sometimes part of the good news, but you need to make sure that you understand that as part of your contract correctly in there.
Awesome. Thank you, Mr. Gregory. Just a couple of more. We are finding different versions of wage requirements, including prevailing wages by region. Many non-government RFs in California calls for a new $12.70 per hour commitment for employees to pay employers to pay employees, even if part-time, either in cash or cash benefits. Can you please identify typical requirements of government RFPs? Do they require prevailing wage, living wage,
Yes.
minimum wage, or similar to California's new wage call-outs?
Okay. We are going to see these a lot into the session too, because there is something called the Service Contract Act, or FCA. You're going to see this a lot, okay, and there are two other categories, especially you're going to see it a lot in constructions and maintenance, that is also called the Davis-Bacon Act. In the Service Contract Act, what happened is that there are certain positions that are supposed to be part of the government, but the government chooses to contract those situations out. However, in those cases, the government must pay what is called the prevailing wages, and that prevailing wages is determined by the Department of Labor, and they are issued based on the state and the county under which the contract is being executed at that moment. And that is also understood as the wage determination must be listed in the contract, okay, which labor determinations apply in there, and that is the minimum that you have to pay, not the maximum, but the minimum that you have to pay, and that also includes certain minimum on fringe benefits that you need to provide the employee, from vacation, sick leave, holidays, and either provide the employee certain level of fringes such as health insurance and several others, 401k, that is usually paid within what is called the H&W for health and welfare, that is based on the number of hours in there. It's a very, very intricate way to make the calculations, but yes, it is available, and the agency that determines those prevailing wages is the Department of Labor. In the contract, and if you are a sub and they are not telling you which one is the contract, just go to the RFP and they will be listed into the RFP, and you also know it based on the contract that your people may be working in there, and then you say, do we have a wage determination for this state and this county? Okay, and then it's usually a large page. It tells you most of the wage determination are only for non-exempt employees, and then they will tell you, okay, to what kind of a subjects they are. It's becoming a little bit more complicated. And take into account that if you are bidding in a contract that has SCA employees, the government needs to tell you which employees are subject to the SCA, because they have a minimum that you have to pay, and you cannot bid less than that minimum. And number two, the existing employees in place have what is called the rights of first refusal, i.e., that if you are the winner, you can tell them, these employees, okay, I am now the new contractor. Would you like to come over and work for us? Okay, as for my company, and you must pay them the same or more after that level, not less. And remember, once you bring these issues, and I have seen this with some of my clients, that they decided to pay less, and there are conditions on how you need to report those wages, even to the Department of Labor and to each agency, and you can be audited for those items. Okay? And there is no way to get around these audits, and that's one of the worst audits that you wanted to be involved, because many people have been trying to trick employees in there. The employees complain to the Department of Labor, and then the entire company gets audited for violating the wage and labor determination. The Davis-Bacon Act is similar to that, but it's not just about the location, it's also about what kind of work the person is doing. For example, a plumber may be paid a different wage at two different counties, even though that they are adjacent to each other within the same state or two different cities. And you have to follow that, and you need to, when you are subject to the Davis-Bacon Act, You also must submit what is called a certified payroll. The certified payroll, people think, oh yeah, I just paid it. No, the certified payroll is a special report that you have to say how many hours the people have been working on each one of these labor categories in each place and in each county, and how much they are being paid for that. We actually teach through the PTAC some classes related to that, related to payroll, and people understanding that type of a payroll. If you need some information, I can send you some of those. Send me an email, okay, related. But the Davis-Bacon Act is more complicated. If you remember, some of you, because one of the issues when there is a disaster in the area, for example, when Hurricane Katrina flooded the entire city of New Orleans, part of the problems in there that when the city is flooded, that sometimes people do not know exactly where they are and where they are helping. So one of the conditions that is usually included in there is that they say that lift the conditions of the Davis-Bacon Act, okay, in this contract response. Because people may be doing the work in this other corner, and they may not know exactly where they are in order to comply with the Davis-Bacon Act regulations. Okay, so the Davis-Bacon Act is far more complicated than the SCA rule, but both are very, very strict in subjects about what do you need to pay. Very recently, we got a contract, a government contractor that has two people working under the SCA. He received a bad advice, and now we have to go over and recalculate. We're telling you have to recalculate the amount that needs to be paid, and these employees were, to receive far more money than what they were getting simply because the calculations were not done correctly. Those are the kind of issues that you do not want to be involved in there.
All right, thank you, Mr. Gregory. This could be the last question for the day, so everybody can have their day back and their time back, and we appreciate everyone for attending. Somebody asked, good evening. I'm a prime contractor for the U.S. Army, and I'm trying to be compliant with requirement 5.3.1 from PWS. System for Award Management, SAM, Service Contract Report, and to report for the fiscal year as required. Total amount invoiced, prime contractor hours expanded. But there is nothing required for service contract reports for my entity in SAM.gov. Is there an annual financial limit? And when I exceed it, I, as a prime contractor, receive a report notification and access in that section.
I'm going to be honest with you. I have seen similar issues like this, but to give an answer about what you need to do with a very summarized question like that is too risky. I recommend that if you can send me an email with more details, I might be able to give you a better and direct response. There are certain items and contracts that needs reporting, sometimes annual reporting, in which you have to report, okay, the people that you hired, the hours that they work by the labor categories. Not sure if this is exactly what they may be asking you to do, okay, and that is also now included within the FAR or within other DFAR regulations in there. But send me an answer, because to give an answer, a blanket response into there about what may be needed might be too risky and may send you spinning into a different directions that may not be correct.
All right. All right. Well, thank everybody for attending. If your question was not answered, I'm going to send them to Mr. Gregory, and he will answer the questions for you and send them back to you. I'm also attaching his email address in the chat box as we speak. I hope everybody enjoyed today's session. Please feel free to take the survey. Let us know how we did today. And please join us for next week. We do have a webinar. I can't think of the name of it, but I think we do have a webinar next week, which Wendy will be hosted, my coworker. And also part 2 of this webinar will be on January the 18th, same time, same place. So we will see you then. I hope everybody have a wonderful year and a wonderful day as well. Thank you. Thank you, Mr. Greg.
Thank you very much, Carlos, and thank you to all the participants that are around here. And thank you, Wendy, too. Okay?
All right, now.
Okay. Bye-bye.